Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. Bitcoin falls to this 20% level. Since the beginning of Bitcoin, every time it's been here, it's basically gone up by 70% to 200%. In Solana's words, that means volatility is down 50%. It always has a big gathering when it gets there. It seems really close. Solana hit that pretty wedge pattern and bounced off the bottom. There's no real reason why today is a bit weak in Solana, and it looks like the next step is for the bananas to ripen. Raoul Pal, CEO of Real Vision, thinks that. This cycle, both Bitcoin and Solana are set to have huge rises. In his most recent show, Pal talks about his latest thoughts on Bitcoin and Solana's exciting futures based on how well they have done in the past. But Pal is interested in the trend that keeps showing up in Bitcoin's market activity. He points out that Bitcoin has generally responded to drops in volatility by going on big rallies every time it did so. He says that these sell-offs have led to gains of 70% to 200%. This finding is important because it shows that Bitcoin's market often goes through a period of low volatility before it starts moving strongly upward. In the same way, Paul sees a trend with Solana. He says that the volatility of Solana usually drops to about 50%, and then the coin usually goes on a big rally. Solana recently bounced off of a wedge pattern, which in technical analysis usually means that a trend might be changing or staying the same. The fact that the price bounced off the bottom of the wedge is a good technical sign for Solana. I believe the gathering is now over. At all. During the election cycle, around the time of the half, this happens a lot. This is how it usually goes, and it ends in July or August. Not only that, but FedNet cash drops at the end of every quarter because of this. As people say, banks window dress their balance sheets. The amount of money in FedNet dropped very quickly. The building will be taken down and put back together again tomorrow. It's possible that that will also affect assets, even though it's been known for a while. From the way the prices are set up and how everything looks, I think we hit the bottom. We dropped to just below 120 in April to 118. Then we went up, then back down, making this wedge-shaped pattern. I think we'll just keep going up from here. A few months ago, I wrote about this in Global Macro Investor. Arthur, who also joins GMI, and I both agree on this. I believe that the BOJ is getting us ready for a big show of tricks. BOJ is very good at what they do. They've been messing with the FX markets for a long time, and everyone who tries to stop them loses money. I think they're sucking in the last spot right now. China also needs money. The market for the euro-dollar is the banks in Japan. They have the most money in the euro-dollar market right now. The point was that they don't have enough money. The US will give them an unlimited line of credit somewhere so they can step in. That money will flow back through the banks and into treasuries and to China, which needs dollars badly but doesn't want the Fed to give them a straight line of credit. If there is a way to get shockingly large amounts of cash right away, the Fed cut would be it. The Japanese step in. That would destroy everyone. This is something I've seen the Japanese do a lot of times. They usually do it with the Fed's okay, because that way they get the most for their money. Yellen has been to China twice, that much we know. It's true that Yellen sells more trash bonds than anyone else in the world. She's like Mike Milken in that time. The Chinese are telling her, "We don't have any dollars to buy your bonds." She used to sell those bonds. The math is very easy to understand, like, okay, let's figure this out. How can we get you dollars so that you can pay off your property developers' bills and everyone else's? You can then use those dollars to buy more treasuries. It looks like it was made in Japan. In general, the market is stuck, and the dollar is likely to go to 200 or 300. Oh my God, it's falling apart. They're no longer in charge. At this point, that's where the story stands, and people are expecting help to arrive soon. They are looking forward to it. The size of the action is what will really matter if they go big. It shows that they have support. Then you'll see it, whether it's through swap lines, the foreign central bank reverse repo, or some other method. Don't forget that they also try to hide the processes a lot of the time. That's what I mean. It's all about the size. Dolly ends down 1.5% when we get in one day and up 1.5% the next. If that happens again the next day it's on, that's just a huge amount of flexible money coming into the system from the Japanese. There's split and RSI. All of this is adding up. Technical research is used by the BOJ. Also, they're pretty good at this kind of thing. Look around. It feels a lot like 1998 when the dollar was this weak. What was it? 1,997 in 1998. Huge amounts of people were long the dollar yen. It was one of the biggest deals the world has ever seen. The Japanese stepped in. It doesn't seem to bother anyone. Then the whole thing fell apart. As for Tiger Management, all of these guys got sucked in except for Paul Tudor Jones, who got it right. Another thing we need to think about is that, after last night's debate, it's clear that Biden will be replaced very soon. Who is that person going to be, and how will that change the way we play? Some people think that Newsom is being set up, but who the hell knows? It could be anything. Since Newsom is from California, he is probably more pro-tech in a deeper way. There's no doubt that the Biden government was able to get all of the big tech founders to support Trump. All of them used to vote for Democrats, but now they're on the other side. They might be able to be stopped by Newsom after all. It was Newsom who set up for Xi to meet them in California. That's a different story. I'm not sure. This is what we all need to think about. How likely is it that Newsom is for crypto? There's a movie coming out today that just shows all the things I'm looking at to show why I think the trade is on. It's very easy to see the Solana Bitcoin chart. It's a lovely stair-step accumulation. The ETH one is the same. Once more, they all landed at the base of the wedge curve. All of the relative trends that keep going up go up. If it does, Solana is going to do a lot of wonderful things. I believe that if the space is to become more liquid, the further out the risk curve goes, the more Solana has written and gained a lot of attention. Fire Dancer is still not out. This has a lot. I believe that beating Solana this time will be really, really hard. If it can find a huge use case, that is. All of a sudden, YouTube is being turned into Ethereum tokens. The story and energy that are currently behind Solana will still make it hard to beat. Liquidity around the world has been flat. That means there is no extra cash. It's not really true that the business cycle has turned around. That means that either money isn't being put back into the business or people aren't making money. For now, you're in a no man's land, and the next one will be the ETF. That will bring new money into the world of crypto. After that, we can all have fun with that money. That's pretty much how it is. We need to remember that this is a crypto land economy, and for it to grow, we need foreign direct investment or even money flows. We need new money in either case. Around the summer, the cash cycle is over. The crypto market tops, but it doesn't happen until the end of the year most of the time. Could the peak come earlier? I don't know, and I don't want to play for that. One thing about the rate cuts, we don't need them for this. The thing that makes it go is cash. Rate cuts are just a delay on cash that happened a long time ago. Rates went up a lot from 1994 to 2005. The bond market went crazy. Everyone believed that the economy would weaken. It didn't rain and snow. In 1995, the Fed cut rates by 25 basis points, and then they cut rates again by 50 basis points. Rates were still a lot higher than they were at their lowest point in 1993, and the Fed didn't do anything until 1998, when the Asian crisis hit. That was the longest stretch of outperformance in the history of the market. There should be funding even if things are stable. Everything we write about the future just says that the business cycle will get better from here on out. Some things are being chopped around and making noise. As we move into global summer, everything points to it getting better. It does not need to go down. There's nothing we need to do. A long